Hi, the video you're about to watch I think is a really important video. It's a real journey of understanding. Now, I did this pretty much in one take, without notes, just sitting down to get what's in my head out on video. The first 17 minutes, the sound quality is pretty crap, and that's my fault because I went rogue, did this without producers, editors, anybody, because I knew I had to do it. So excuse me for that. It does get better as we go on. Also, once I'd rewatched it, I realized that there were some footnotes I wanted to add, further clarifications, further learnings that I thought were really important into this. So make sure you watch through to the end as well. Really hope you enjoy it. And again, apologies for the crappy sound at the beginning. Hi. In this piece, I'm going to be representing myself as Raoul Pal of Global Macro Investor, as opposed to Raoul Pal, CEO of Real Vision. I like to make the difference between the two because Real Vision doesn't have an opinion, but I obviously do, and I'm paid to have an opinion for some of the world's largest hedge funds, sovereign wealth funds, family offices, high net worths, etc. And that's my research business, Global Macro Investor. I want to give you the big picture, the really big picture, where I think everything is going, and it's obviously mainly about the digital asset space because I think it's the single most important thing for everybody to understand. And in order to do that, I'm going to give you my journey of discovery so you can piece together some of what I've learned on my way, because there are many narratives you've heard me speak about, but I haven't really put the whole lot together to give somebody or all of you something really meaty to get your heads around. Now, again, you don't need to agree with all of it, but I want to show you my journey, how I got here, what I think is going on in the macro backdrop, what I think this means and why I chose Bitcoin and then cryptocurrencies, why I diversified, what I think the actual space is really headed, and where this whole thing is going and how it fits in to the future of everything. So there's quite a lot here. So it's going to take a bit of time and it'll take probably a few watches of this to get across everything that I'm trying to talk about. Let's go back to the beginning. So 2008 was a period, in fact, I'm going to go back to 2000. 2000, we started to see the debt bubble increase and the rise of central banks. So Alan Greenspan back in 87 was the first one to start using interest rates really to stabilize markets. That became modus operandi by 1998 when long-term capital blew up. The Fed did it again under Greenspan. Then 2000 we had the stock market crash and the recession. And again, interest rates were used heavily. Now, the money illusion meant that lower interest rates, people thought, I'm going to take on more debt. So they took on more and more debt. And that led to the housing bubble, as we know. And then that blew up and almost brought down the world's financial system. Now, I was in Spain at the time. I'd left the hedge fund industry, but I was still writing, as I do today, Global Macro Investor. And I realized that the fragility of the system was now becoming the most urgent thing, and that after 2008, we hadn't really solved it. In fact, it was bloody clear by the time we got into the European crisis in 2012 that it was not solved at all, and debt was the big issue. And the only answer at this stage became the printing of money, because there was no other way to deal with it. It had become too big, too gigantic, too scary, too dangerous for anybody to let the fire burn. The whole Austrian economic idea of creative destruction was now almost impossible.
What we're showing you here on our YouTube channel is just the tip of the iceberg. No matter where you are in your financial journey, whether you're a beginner just looking to break into the market or a financial professional looking to up your game, Real Vision has something for everyone. Every day, our team of expert journalists provides in-depth analysis, written reports, access to live streams, and access to our community, The Exchange, where you can interact with people just like you from all over the world. For just $1, you can unlock all of this and more at realvision.com. Try our Essential tier. If you like what you see, it's only $20 a month thereafter. So click on the link in the description, go to realvision.com, and see what you think. We look forward to seeing you there.
For anybody to let the fire burn. The whole Austrian economic idea of creative destruction was now almost impossible to implement because the destruction would have been total and complete. And many people think, well, the bankers could have gone under, maybe we should have let everything clear. Well, at this point, with this many old people as baby boomers into their retirement ages, you would have wiped out everybody's savings and investments too. And that is okay if you're starting from nothing, but anybody who'd started with anything would have been entirely destroyed. Now, this story shouldn't be a surprise to you because it is the story of Japan. We saw this in Japan, where the Japanese realized that their aging population and their saving assets could not be destroyed. So the only thing to do was try and manage crisis via the role of the central bank and the merging with government policy and fiscal policy. And Japan has been basically the petri dish for all of this. And almost everything Japan has done has happened elsewhere in the world. But after 2012, I wanted to make sure that there was a way out. Now, that was the first time I wrote an article. I think it was back in 2013. I wrote an article called The Life Raft, where I talked about gold and, in fact, Bitcoin. I had started to have Bitcoin on my radar screen as some good friends of mine, some Global Macro Investor members, had been involved in the early days. I was going to set up the world's safest bank. That was the idea. A bank that only held US treasuries, and that any money on deposit was entirely matched by treasuries that were held at the Fed. No rehypothecation, no nothing. So it was kind of a bank outside the banking system. I had that idea, but it was bloody hard to set up a bank. You know, people like Caitlin Long, I'm good on you. It's really hard to do. So I was running around the world looking at this idea, and the Bitcoin idea came to me from Emil Woods. And Emil said to me, listen, this might be your answer. And I had seen it and looked at it, and it was very interesting. In 2013, I bought it. It went up 100% in a month, and I sold it. I was like, wow, okay, what was that? I wrote an article in 2013 or 14 about the stock to flow of Bitcoin, looking at it versus gold, and saying with gold at about $1,300, where it was at the time, I would impute roughly, without the great maths that my friend Plan B has managed to do, but I had a rough rule of thumb that Bitcoin was probably worth $1 million in comparable terms, using stock to flow, you know, how much gold was underground, how much gold was being mined, etc., and back imputing it into the Bitcoin price. And that gave us a macro framework, and that macro framework became quite well known at the time and got passed around and got many people into the space, actually. Then I was out of the space for a while and then got back in around 2015, 16, and I started buying again, probably around 200, and I think I sold out early when the forks were happening. That was the FUD of the day. You know, we'd had scandals all the way through S-curve moments within Bitcoin, and that moment in time, I didn't understand the ecosystem, I didn't understand the adoption effects of Metcalfe's law, and it was much earlier. So I thought this was an existential crisis when you're forking something. What did it mean? I didn't really know, I wasn't comfortable, and I'd made 10 times my money. It was at 2,000 at that point. So I took profits, and obviously it then went up another 10x, and I felt like an idiot. Well, I didn't have money in the bank, but I didn't make as much money as I could have done, should have done. I didn't have a massive allocation. I had a deep, reasonable size, but not life-changing amounts. But it taught me a lot about the cycle. You know, I pretty much saw the top of the market, and then it came down. And, you know, I still believed in what Bitcoin was, but I didn't think I had a time and a place right now. And I thought that was important because macro does matter to Bitcoin, doesn't exist in a vacuum. And so it was off my radar screen, and you know, I was looking at most macro opportunities. So we're talking about 18, 19. So 18, 19, we saw some interesting opportunities in the bond market, because I thought that the global business cycle was slowing down, and we had one last shot at the rate trade, the heroic trade of loading up on Eurodollar futures as the Fed had to cut and offset the rising in rates that they'd done, and that the bond market was going to start pricing in deflation again as my economic indicators started forward-looking, predicting a recession. That came, as we know, in March. But in March, we go back a bit, I had always said that crypto, and Bitcoin in particular, and macro were the same thing. They just didn't know it yet. And most participants didn't know it and didn't understand it. Crypto came from a different community. It came from a community of developers, the kind of cypherpunks. It came from Austrian economics